Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, we are listening to Bloomberg Business Week.
I mean, I'm listening. I'm talking too. I gotta
Are you
say,
listening?
Anurag Rana called it.
I know.
You know, he was on Quick
That's why
Take
we'd
earlier
like to talk
today.
to him. Yeah.
And he just called it Microsoft's move.
Like, why is everybody freaked out?
Yeah.
Because
He's like, this isn't fundamental.
Okay, so we're going to get to him why, because he is a calming, reasonable, informed voice, and we're going to talk about what's going on with Microsoft and the sector he covers. We'll get to that in just a minute.
We are, though, less than a half hour from the close. Doug Krisner, what's going on in the markets?
Also a reasonable voice, might I add.
Very reasonable.
Well,
I don't know about that, but it's kind of you to say. We're very near the best level of the day. We're about 28 minutes now until the closing bell. You guys referenced the Microsoft story. That's how the day began, with a warning of the negative impact of a stronger dollar. Microsoft shares had been down by as much as 4%, but the stock right now has completely reversed that trend. We were pushing higher by about 0.3%. NASDAQ Composite right now with a gain of about 2.2%. We've got the Dow up 0.9%. And I mentioned a moment ago about the S&P 500 being ahead by about 1.4%. Leadership coming clearly from consumer discretionary. The material group is also strong today. And communication services stocks moving up as well. We had some Fed speak today. Fed Vice Chair Lael Brainerd was saying it's hard to see the case of a pause in Fed tightening in September. I know that's been a topic of conversation. The blackout period, as you know, is going to end on Saturday ahead of the policy meeting on June 15th. Very little movement in the bond market today. We are up at the long end with the 10-year Treasury now higher by a little more than a basis point in yield, 291. Virtually no movement at the shorter end. 2-year is at 264. Some mixed economic news today. Durable goods orders were up in the month of April by more than forecast, but that ADP number is causing a bit of concern. The fewest number of jobs since the pandemic recovery began. Dollar weakness, that's another story today with the Bloomberg dollar.
Mentioned Microsoft was out with that warnings of a drag on profit, and the world freaked out, and the skies got dark. And here we are. We're looking at Microsoft shares. Wait, let me bring them up on the Bloomberg.
They're higher, Carol, by 0.3%.
But they were down almost 4%. But again, talk about a rebound. So he saw it.
Yeah, like I said, Anurag Rana called it. He's senior software and IT services analyst at Bloomberg Intelligence. He joins us on the phone from Chicago. Anurag, good to have you with us. You joined on Quick Take Stock earlier today, and you gave the impression that, you know, the sky, in fact, was not falling, despite the fact that Microsoft gave this warning early this morning. And it looks like shareholders are finally getting the message.
Yeah, I mean, I think this has been an issue that all high-growth companies in the tech world have been, you know, on the edge. Every time you hear any news, people sell first and they think later. And that's how probably the reaction was this morning, because when Microsoft reported that, you know, because of FX, they're going to have slightly lower revenue growth by less than 1%. As you said, the stocks did react downwardly. But frankly speaking, that's more of a transitional thing. In fact, I would argue that in the middle of the quarter, if they are kind of reaffirming their guidance, then it's not a bad deal, because we have a lot of macro problems going on around the world.
So they're being a grown-up? Is that basically it? And saying, hey, folks, let's get real. Like, we got this from Larry Fink. Like, we're in a rough environment.
Yeah, we are in a rough environment, and which is why, first and foremost, I was surprised to see, and we ran some numbers this morning, that ever since they reported on April 26th, the sell side has not changed their estimates at all. I mean, you know, a company gives some guidance, but during the quarter or during next month, you see where the macro is, and you go and you change your models based on how the world is shaping up. But we didn't see any changes, which was surprising to me, because, you know, one would have taken some numbers down anyway because of macro conditions. So when they reported or they came up with numbers today for the full quarter, it was all because of FX, which is, in our view, a good thing.
But is there something to be said, and we've talked about this with, I think, Bank of America, but we've talked about Jamie Dimon, like all of a sudden he goes from stormy clouds, you know, or stormy skies over the economy.
Hurricane time.
To a week later, hurricane, you know, like, so that when they reported, for them to come out again so quickly thereafter and kind of do some revisions, does it make the world kind of be like, well, wait a minute, are things rapidly or deteriorating faster than companies realized? And that's why they're giving these updates. Like, kudos that that Microsoft gave the update, but it's just a reminder that things are kind of happening maybe faster than everybody anticipated.
No, I think that's more of a compliance thing. They are presenting at a conference today. So according to Reg FD, if you have given a guidance and you know for sure that, your impact is going to be higher compared to what you did before, software companies will come out and do a mid-quarter guidance or a mid-update saying that, listen, we gave you these numbers, but the world has changed. But in this case, the world hasn't changed on the demand side. It's just changed on the currency side. It's a completely different equation.
What about for other companies that, early on in the day, as the narrative shifted around this, the concern was, okay, look at other companies that do a lot of business, other tech and software companies that do business outside of the U.S. How does this news affect them?
Oh, it's going to affect everybody. Oracle's going to report next week. That's going to be a big problem for them. Adobe's going to report after that. I think the week after that, it's going to be a problem for them. Salesforce just reported a few days ago. They did also mention that because of currency, there's going to be another 300 million impact on their full year growth rate. So, I mean, it is now becoming a known issue. But I think the silver lining is, again, from Salesforce results, for example, that the billings number or the bookings, of new contract still remains very strong, which is, again, unusual from my side of my viewpoint, because, one would have expected some slowdown.
So from what you're seeing, and I'm thinking about what Gina Martin Adams of Bloomberg Intelligence said earlier to us, that this isn't an earnings recession right now. And I think this is important as we try to assess whether or not the U.S. economy goes into recession. From what you are hearing, Anurag, from the companies that you follow, what does it tell you about kind of the economic market environment right now?
So at this point, we are not seeing a material slowdown. We've seen some modest pullback in Europe, or I would say deal activity getting longer in Europe, but we are not. Having said that, I do expect second half numbers to get softer as these companies report over the next, I would say, month and a half, because nobody knows how much of IT spending you're going to do. Now, within IT spending, we remain more, I would say, constructive on areas such as cloud and security, which are a must-have. You have to spend on those areas, whereas we could see some spending pullback in areas such as hardware, legacy software products, and consulting. Those could be some of the areas where take I would say, the brunt of the pullback.
Yeah, this is where you go from like discretionary versus not, especially when it comes to the tech spend. There are certain things you just can't cut back on. Anurag, thank you so much. Anurag Rana, Senior Software and IT Services Analyst at Bloomberg Intelligence, joining us on the phone from Chicago.
Let's get a check on the latest world and national news with Denise Pellegrini in our New York newsroom. Hey, Denise.
Is saying that Queen Elizabeth will miss the Platinum Jubilee church service. That's after feeling discomfort during earlier events. The Queen is 96. Senator Murphy telling us he's confident New Jersey will pass stronger gun control laws.
No, I'm an optimist on our package. I believe, at least in part, and I hope in full, it will pass. But some Republican lawmakers have put forth some horrible bills to allow things like carrying weapons in church, to re-allow hollow point bullets. Yeah. And I want all these bills to get a vote, because I want all 9.3 million residents in New Jersey to know exactly where every single one of us stands on these.
And Murphy, speaking with us on Balanced Power, will be carrying President Biden's comments on the topic live this evening here on Bloomberg Radio. And the sentence is in for celebrity lawyer Michael Avenatti in the fraud case from porn star Stormy Daniels. More from Bloomberg's Nathan Hager.
A federal judge in Manhattan has handed down a 4-year prison term to Avenatti for stealing hundreds of thousands of dollars in book advances from Daniels. Avenatti was convicted in February of wire fraud and identity theft. He allegedly blew the stolen cash on personal expenses, including Ferrari payments, while convincing his client in text messages that her publisher was to blame for the missing payments. Avenatti fought back tears before he was sentenced, as he told the judge he had failed in a cataclysmic way and will forever be branded a disgraced lawyer. In Washington, I'm Nathan Hager, Bloomberg Radio.
All right, thank you, Nathan. And some job cuts in the crypto space. Rain Financial laying off dozens of employees. It is one of the largest crypto exchanges in the Middle East. Global news 24 hours a day. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. Carol Masser, Tim Stenovic, live in our Bloomberg Interactive Brokers studio, streaming on YouTube. Well, the Winklevi, also known as the Winklevoss twins, a couple stories here.
Yeah, a couple of stories
Both
about
kind of rough, right?
Do you know why it's called Gemini? Because they're twins.
Because they're twins.
Yeah, that's fun. Okay, so
Hence
yeah,
the
what you're referring to is
Where do you want to go?
Well, I want to start. Actually, I want to start with the news here, okay? Because
Well, starting with the news is always good.
but there were two stories
Tim,
here. Okay?
so we're a news organization, and we start with the news, you know.
But there's two pieces of news today, and I want
Okay.
to start with this one by
Which
the
one?
CFTC. Okay, so the
Yes.
Winklevoss twins, Gemini, has been being sued by CFTC over Bitcoin futures. The CFTC, that's the Commodity Futures Trading Commission, is claiming that the cryptocurrency business misled the regulator about a Bitcoin futures contract. In a lawsuit filed in federal court in Manhattan today, the CFTC alleged that Cameron and Tyre Winklevoss's Gemini, quote, made false and misleading statements in communications with commission staff from July to December 2017 about the operations of the Gemini exchange and the Gemini Bitcoin auction.
All right, so here's the quote from the CFTC. The proposed Bitcoin futures contract was particularly significant because it was to be among the first digital asset futures contracts listed on a designated contract market at a time of fervent interest by market participants in obtaining exposure to Bitcoin through the derivatives markets. I mean, part of this is like kind of the first movers and stuff, right? And so CFTC is looking to them and those knowledgeable, right, to hopefully do it right. So it's a case, so we don't know exactly how this is going to play out.
We should know Gemini
fair.
did say it would fight the suit. They said in a statement, quote, Gemini has been a pioneer and proponent of thoughtful regulation since day one. We have an 8-year track record of asking permission, not forgiveness, and always doing the right thing. We look forward to definitively proving them this in court.
Real quickly, Gemini Trust, though, that crypto business run by the billionaire twins, the Winklevoss twins, telling staff today of plans to slash the company's workforce by 10% as trading across the industry slumps. We're just seeing, right, the crypto winter continuing to spread. What?
Yeah, I mean, look, it comes after Coinbase and Robinhood as well.
Right. We're definitely seeing a mega shakeout. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We're less than 13 minutes from the closing bell. I'll give you a sense of the overall equity market action in a moment. Citigroup may record losses of at least $50 million after a fat finger trade at its London office last month. You may recall this triggered a flash crash in European equities. Now, we are told Citi is still tallying the losses from the mistake, and the final figure could balloon even higher. The stock right now in Citi weaker by about 0.4%. A lot of positivity in the equity trade today. The S&P 500 very near the best level of the day. Consumer discretionary shares rallying. That's principally Tesla story. Tesla shares right now up nearly 4.5%. But we're also seeing strength not only in consumer discretionary, but material and communication services shares rallying as well. Kind of curious because the day began with a warning from Microsoft on the negative impact of a stronger dollar. Microsoft shares had been down by 4% earlier. Right now, pushing higher by about 0.4%. NASDAQ Composite with a gain of 2.3%, and the Dow Industrial Average is ahead 1%. Looking at a rally in crude oil, WTI right now above 117. We did have news that OPEC will increase the size of its oil supply hikes in June, or check that July and August, by about 50%. But the focus for today has been on this drop in U.S. crude inventories. Gasoline stockpiles, by the way, here in the New York area, now at the lowest level since 2017. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Thanks to the spectacular demise of Terra USD, a cryptocurrency that promised to be always worth $1 but was suddenly worth a lot less, the world is better acquainted with stablecoins and knows how unstable they can be. Luckily, the collapse hasn't had serious repercussions in the traditional financial system. But if the U.S. doesn't act soon to regulate these things, the next one could. Unregulated stablecoin issuers are prone to creating systemic risks. And the more connections the crypto world forms with traditional finance, the greater the chances that a stablecoin crash will cause broader damage. There's no mystery about what needs to happen. The Treasury Department issued a report last year detailing the steps that Congress and federal agencies ought to take. All that remains is to get the job done, preferably before stablecoins trigger the next financial crisis. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
You are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. It's almost time for the banana break, isn't it?
Yeah, we do a little banana break at just after 4:11.
We get a little hungry around here.
Be 3 hours.
Yeah.
Gotta get some food.
God, got a little grumbles in my tummy. Meantime, on Wall Street, as Doug mentioned, we've got a rally underway, bouncing off those lows of the day. Quite a swing. I was just looking at the NASDAQ 100, up 2.5% its high, down 0.8% its low. So what, a 3.5 or 3.3% swing from high to low?
Yeah, that's quite the swing. Let's hear from Liz Young, the head of investment strategy at SoFi. Liz joining us this afternoon on the phone from New York City. Liz, how are you?
I am good. I'm delighted to be here, especially on our rally day.
Yeah, we're
I thought
delighted
you were going to say on Banana Day, but that's okay.
Every day is Banana Day. We're delighted to have you back with us, Liz. I mean, how should investors look at this rally that we're seeing? Because it does snap a 2-day, or would have been a 3-day losing streak if lows would have held for the day. Did we hit the bottom last week?
Oh, Tim.
How dare me?
Come on, go ahead, Liz. You can be like, Tim.
Insert groan here.
Hey, people want to know if that was the bottom.
I know, and I hate to let them down. I'm not going to try to call it. I don't think anybody should, frankly. I don't think it's a useful thing to try to figure out, especially because even though at some point in the future we will look back and find a day where we say, oh, that was the low, right? That's where we hit that low point. this entire process right now is a bottoming range, right? And I think that we're going to be in it for a little while still. So the original question was, how should we look at this rally? I don't think that we can declare premature victory. We don't have really any new information. Now, what I will say is after going through a really tumultuous April and then going through May, where at one point we had swung 12 full percentage points, from bottom point to top point. I mean, that is a huge swing in 1 month's time. But if you would have fallen asleep April 30th and woken up May 31st, it's as if nothing happened at all. So I think investors are a little bit battered right now, and a lot of the whiplash that has occurred in the market could still keep occurring through the first part of June, maybe even all of June, until we have a little bit more information from the Fed and we get through at least another hike. I actually think we need to get through 2 more hikes before we start to be able to look into the future and say, okay, I feel like I know more about where things are going.
Yeah, I do feel like we're going to have to let the Fed do its thing for a little bit and then settle and see how it plays out, right? Because those Fed interest rate hikes, we talked about with our Michael McKee, who follows the Fed and the international economy, and said, Fed moves, impact things like auto sales and home sales. They're most sensitive, and we saw that already play out. We've seen obviously some weakness in both of those sectors, but the rest of it's going to take some time. Having said that, Larry Fink of BlackRock on with our David Weston just about an hour or so ago, saying that the Fed doesn't have the tools to fix the supply problems or fix the COVID lockdowns, and that's what creates the inflationary pressure. So how do you think about that, and then ultimately, as the Fed is raising rates, impact that will have on asset values, particularly in the equity trade?
Yeah, well, first of all, I love David Weston, so I love that we just got to reference him.
We all do. It's a little bit of a fan club over here. He is so great. Very smart and thoughtful in his questioning.
Look, the comments are correct that the Fed can't fix the supply problem. And the comments are also correct, however, that they can affect demand. And inflation is a two-pronged beast. So the more demand there is, and if we have constrained supply, that's what causes inflation. A very simple definition of inflation is more money chasing fewer goods. So we're correct that they cannot fix the fewer goods problem, but they can fix the more money problem, right? And we have officially started quantitative tightening. Rate hikes do affect autos. They do affect the housing market, but that's on purpose. And if you think about what's been driving inflation, used cars and trucks were a huge driver of inflation for a long time.
Right.
And we want to see that roll over. The housing market is a little bit more difficult to measure in our traditional inflation indicators, but we have started to see some softness in the housing market too. And I think that also needed to happen. That's something that is pinching consumers. And there's been a huge growth, obviously, in mortgages, and then home prices have hit just astronomical highs. So we did need to see, or at least start to see, a rollover in those particular spots. I think the Fed stays on this path, though, for a while because they don't have any reason to stop yet. They obviously are not going to be thwarted by equity returns being negative. If that was going to happen, they would have already done it, right? So they've still got a tremendously tight labor market, and that's probably going to take a while still to crack. They still have an economy that, as far as anybody can tell on things like PMI and manufacturing activity, retail sales is still pretty strong, and a consumer that's still spending. So there need to be more cracks in the pavement. I think they will come, but there need to be more before the Fed relaxes.
It's funny that you say PMI, because I was just looking at our Markets Live blog, and it says none of historical conditions are met for stocks to bottom. And I do wonder, and they talked about specifically about the ISM PMI, markets bottoming about 2 months before the ISM PMI manufacturing index stopped falling. This is something that we've seen historically in saying the average PMI reading at the stock bottom was 48 compared with 56, which is what we see today. I love the research you sent over. You look at a lot of different metrics. What's the metric on your radar to really understand maybe when we have reached bottom?
Yeah, so I tried to take a little more positive spin on it. Instead of saying, let's call the bottom, I took an aspect of when can I feel more confident in one of these rallies? We keep talking about bear market rallies, right? And we've really only had 3 periods this year where we've had a rally that's lasted longer than 3 consecutive days, which is pretty sad. This is a tough start to the year.
Yeah.
But when can we start to feel more confident? It's things like the market broadening out, so market breadth, and the way that you can measure that. There's a number of different ways you can measure that, but the ones that I looked at were things like how are the different indices performing in those rallies. So of the first couple rallies that we had, the NASDAQ did the best, the S&P market cap weighted index did the best, and the equal weighted index didn't do quite as well. In this last one, all three of those indices did exactly the same, which tells me that there are other sectors besides tech that are starting to show strength or catch a bid, however you want to say it.
Right.
And there are smaller stocks that are catching a bid, and that's definitely a good thing to see.
Well, that's good to know. We talk a lot about that small cap space in particular. Hey, Liz, always fun, always thoughtful and informative. Liz Young, Head of Investment Strategy at SoFi Technologies, on the phone from New York City, a member of the David Weston fan club, I'm just going to say, along with the rest of us. All right, time to head over to our TV team for Beyond the Bell, live on radio, TV, and YouTube. We're counting it down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs at an undisclosed location. We're counting you down to the closing bell here. And to help take us beyond the bell, it's our global simulcast partners, Carol Masser and Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, and YouTube. And Carol, we were just talking here on Bloomberg Television about how much conviction there is to some of these rallies we've been seeing.
See, and I thought you were going to talk about LeBron now being billionaire status. I thought that was kind of interesting. I think it's interesting that we're seeing some buying into the close today in these last few minutes of trading, but we've had wild swings. The NASDAQ 100 alone, up 2.8% at its highs, down about 0.8% at the low. So volatility, even in an update, continues.
Yeah, we saw the same range with the S&P 500 today, down as much as 0.8%, as high as 2.74%, but off of those highs, but still higher on the day.
LeBron James, I mean, he's in startups, he's in probably a bit of crypto. I'm wondering if they remeasured. He probably was like 2 billionaire, whereas now maybe dialed it down a little bit. But this has been interesting that we've actually seen a bit of buying into technology. We've also seen some buying into crypto today. So once that correlation, once again, kind of working.
Okay, so we're talking about LeBron James. Okay, I'll bite here. So
I'm so disappointed. You always join in on these things, and I get nothing.
I know. Taylor knocked me off my game because she was trying to
Don't blame Taylor
or something. But in all seriousness, though, the fact that he did this while an active player is significant. I mean, really, any athlete to get to $1 billion is significant.
1.7 according to
But to do that while you're an active player, it says a lot about just how much has changed in professional sports and how there are so many different avenues to make money beyond just your salary. The media. Is he getting the show here?
Yeah, Space Jam, A New Legacy. Wasn't that a good one?
No, it was not.
Caroline, picking up the baton.
My apologies to LeBron, but that was an awful movie. Dow Jones Industrial Average, though, well, not awful there. It's going to finish the day higher by about 1.3%. The S&P 500 higher by about 1.8%. And the NASDAQ Composite going to finish the day higher by about 2.7%. The Russell 2000 up 2%. And we should point out, all of these indices basically started off the day in the red, and it looked like they were going to sink pretty deep into the red, but a big reversal here. As a lot of people, I guess, they found bargains or opportunity, who knows, but an update here for all of the major indices, Carol.
Yeah, well, early on we were blaming Microsoft, right, with their warning. Go figure, that stock alone was down about 4% at its lows today, but ending the gain by the close here, up about 0.8% here, Taylor.
Yeah, we certainly see that on a sector level. This, dare I say it, broad-based. Carol, take a look at this. Green on the screen, except for a little sort of measly red here at the bottom. That's energy. You're off about 0.3%. You can sort of talk about OPEC Plus sort of increasing the supply to help sort of offset some of the higher prices. Everything else for our radio audiences we do, even the worst performers, clearly in the green. Let's go all the way to the top. This feels so classic risk on. Tech, auto component, semiconductor equipment. You're up anywhere from 3 to 4.25%. I think what also is interesting, Carol, food and staples are up there as well. Those are also up 4%. When we think about some of the inflationary pressure that was hitting these companies, was maybe gotten so beaten down that maybe investors are coming back in.
Yeah, that's a really good point. All right, so that's the sector play. Let's get to some of the specific gainers in this Thursday trade. Datadog among them, ticker DDOG. This stock up as much as almost 20% at its highs, closing the day with a 13% gain. It was top of the NASDAQ 100, up the most in at least 2 years. Pretty heavy volume. It's a security platform. No real news. They did present at the Jefferies conference yesterday, but nonetheless wanted to mention that one. MongoDB, also an outperformer, pretty much closing near its highs, up more than 18% here. The database software company did come out with first quarter revenue that beat expectations. They also raised its full year forecast. We got those results last night. Still down more than 40% so far this year, and about 7% of the float is shorted. And then Amazon, we've talked about this. The rally continues.
Yeah, this is insane, right?
Yeah, it is.
I mean, not insane, but it's remarkable given the company's size and just how many people sort of turned on this stock over the last few months for them to kind of rush back in here.
How much do you think it's up in the past 7 days? Don't cheat.
20%.
Yeah, 20%. Nicely done.
Did that math.
That's quick.
It's like some to Schwab. You can't stump me.
I know. Can't get anything by you. It's still down about 25% so far. But when we try to see when things are turning, I think that's pretty significant, Tim.
Some of the decliners today include Regeneron Pharmaceuticals. The company has shares falling today after it agreed to buy the immune oncology drug from the partner Sanofi for as much as $1.1 billion. Investors sending shares down 4.3%. Hormel Foods also finishing the day down by 5.15% after the company said that bird flu is causing large supply gaps for its Jennie-O branded turkey products. The shortages anticipated in the coming months come as one of the worst ever avian influenza outbreaks.
Is this where we start talking about how we're not going to have turkey for Thanksgiving this year?
I don't know.
Can we make jokes when we're talking about bird flu?
I think we already know it's going to be expensive.
Can we?
Expensive? Oh, it's just going to be more expensive. But
I think we'll still be able to get it. But I mean, this is one of the worst outbreaks.
There's a lot
the
of
US
those
has
wild
seen.
turkeys running around New Jersey. Can't we just go grab one off the street over there? They're like little nasty buggers.
I wouldn't know what to do with it. I got to be honest. I'm not even going to mention Taylor here, right? The
No, she's going to get Peter involved.
I know. All right, Hewlett-Packard Enterprise. I looked up and saw Antonio Neri on your air earlier today. Company finishing the day down by 5.2%. This after the computer hardware and storage maker cut its adjusted earnings per share forecast for the full year.
Meanwhile, we're talking turkeys. Let's go to the commodities spectrum a little bit because I look cross-asset and we are seeing actually a day of interesting gains in terms of commodities in the oil space. WTI crude up 1.8%, $118 on crude. This after we see the taps actually opened by OPEC+, 650,000 barrels extra in the months of July and August. But not enough, not as much as had been hoped for, even with the leaning on political pressure potentially coming from the White House. So overall, we see once again oil push higher, that inflationary pressure once again pushing up. We see on the flip side, some story of dollar weakness. Maybe this is also why we see oil and some commodities push higher. Overall, this is dollar weakness, euro strength up by almost a percentage point in terms of euro strengthening. The Aussie dollar also strengthening to the tune of 1.3%. Interesting, of course, we look towards a more perhaps hawkish tone coming from the likes of euro, in particular the ECB. Could they be hiking up to 50 basis points in any one go? We also saw hawkishness come from Canadian central bank as well. We overall see a sea of green in the FX space and a sea of red when it comes to sovereign bonds. Over in Europe, we saw selling pressure, it would seem. What about in the US, Taylor?
Yeah, really similar, Caroline. When you think about sort of the calmness finally that's re-entered the bond market after sort of yields higher a lot on Tuesday and a lot on Wednesday, remains some calmness today, but you saw some movement a little bit further out on the yield curve. Yields are rising about 1 basis point or so on the 20s and the 30s. The real focus, of course, though, here, front end of the yield curve as always.
Earnings season still afoot here. Lululemon earnings crossing the wire right now. The headline number is a 1Q EPS coming in at $1.48 and a revenue figure at $1.6 billion. The street was looking for $1.54 billion. So it looks like a beat here for their 1Q numbers. For the second quarter, the company projecting 2Q net revenue of 1.75 to 1.78. That would put it slightly above the average of analyst estimates out there for 1.72. And full year revenue, here's your projection here, also guiding slightly higher, 7.61 to 7.71. That's the new range. The previous range was 7.49 to 7.62. So kind of bumping up the top end of that range and kind of leaving the bottom end right around where it was, guys.
And this is a bigger deal, Romaine, because you think about all the companies that are dealing with supply chain issues. We had our analysts on over at Bloomberg Intelligence talking about sort of, Carol, the new sort of 5-year plan when you think about the international expansion, a new foray into footwear, which is already a pretty competitive market as well. So able to get it done and able to get it done in a significant way, I think has some investors relieved.
Well, and talking in the press release, the company's CEO, Calvin McDonald, talking about the team being agile, and we hear this a lot as we address tough times with supply chains. I do also want to mention, it looks like they opened up some stores as well during the quarter, so continuing to expand certainly their footprint, guys.
Just real quickly, though, I mean, the inventory levels, once again, we've seen this with the other retailers out there, and I know, Caroline, you talked with the CEO of Macy's, I believe, and we're seeing inventory levels at Lululemon up 32% quarter over quarter, and that's more than what the street was looking for. And it seemed like before, in the previous quarters, these higher inventory levels were kind of a good sign given all the supply chain constraints. But now it seems like people are thinking that this could sort of backfire now if we are seeing a slowdown in consumer spending.
Right, backfire in the sense of they'll have to discount if they can't get rid of that inventory. And then, of course, the inventory taking up space, it ends up costing the company money. But if there are supply chain challenges ahead of the holiday season, then perhaps the company can get ahead of that by having this extra
But
inventory.
if you make the wrong bet on the merchandise, that's rough.
Yeah, meanwhile, Megan Frank, the CFO of Lululemon, saying they're not immune to the challenges when it comes to COVID-19 supply chain disruptions, inflationary pressures, but saying also that they've got an omni-operating model, balanced growth strategy. They think that they can navigate these. But really, if I thought we all were pretty much stocked up on all the Lycra we needed, and maybe with the inventory levels.
Speak for yourself.
I know. Well, clearly, Romain, you still got the opportunity to go and buy them. We'll see whether they get discounted at these higher-end luxury ends, at least.
Another thing I want to talk about here, and this is, we talk a lot about some of the labor issues going on. It's kind of the resurgence of some of these unionization efforts. Microsoft putting out an interesting statement here. They're basically adopting principles for employee organizing, and without getting too in the weeds, basically they're saying that they won't stand in the way of any company employee efforts to organize, which would be a departure from what we've seen from some of the other big companies out there, although they do kind of make the point that there's no need for their employees to organize as far as being able to talk with management and advocate for things. But I think this is something to keep an eye on here, because when we kind of talk about the power of the employees right now, if only temporary, or whether the companies sort of bend to that or whether they sort of hold their ground and say, no, we're not going to deal with you.
It's certainly a movement underway. And speaking of moving, we are seeing Lulu shares continue to trade up about 4% in the after hours. All right, guys, we got to wrap. That's going to do it for our cross-platform coverage. Radio, TV, YouTube, we do it all on Beyond the Bell. We'll see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I love Microsoft saying, yeah, you can do it, but you don't need to.
You don't need to, guys. Come on. Yeah, that works.
Your friend.
But it does come as the labor movement at Starbucks and, of course, at Amazon continues to gain momentum.
Yeah.
Let's get a check of world and national news. Denise Pellegrini standing by in our New York newsroom. Hey, Denise.
Hey there, a lot of focus on these shootings happening lately, and authorities in Tulsa now say the suspect who killed 4 people in that medical building yesterday was a patient to one of the victims. Tulsa Police Chief Wendell Franklin says Dr. Phillips performed back surgery on the suspect.
He blamed Dr. Phillips for the ongoing pain following the surgery.
And police say the gunman had just purchased the AR-style rifle hours before the deadly attack. On Capitol Hill, the House Judiciary Committee today debating a comprehensive bill that supporters say would tighten gun laws. But Judiciary Committee ranking member Jim Jordan says Republicans, well, they have issues with the bill on the table.
No one wants another tragedy. No one wants this to happen again. That's why it's regretful that Democrats have rushed to a markup today in what seems more like political theater than a real attempt at improving public safety or finding solutions.
And President Biden is expected to address that issue Jordan just mentioned. The president is scheduled to speak tonight about gun control. We'll be carrying his comments live for you and also be taking a close look at the issue coming at 5 p.m. with Sound On with Joe Matthew. Buckingham Palace says Queen Elizabeth will miss the Platinum Jubilee Church service. That's after feeling discomfort earlier during related events. She is 96. Michael Avenatti has been sentenced to 4 years for ripping off Stormy Daniels. The lawyer was convicted of intercepting the porn star's book advance and citing high-level intelligence officials. Newsweek says Russian leader Vladimir Putin has terminal cancer. And a new round of U.S. sanctions is being placed on Russia today, including on yachts related to Putin. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. Carol Master, Tim Stenovic. Hey, folks, we just want to go through some of the earnings that we just got. We're at the tail end, but nonetheless, there's just a few reports, as you know, that just came out. Where do you want to start, Tim?
Yeah, let's start with CrowdStrike. Shares, the cybersecurity company, down about 1.5%. They're bouncing around a little bit. The company boosted its fiscal year revenue forecast. It did beat estimates there. The company sees second quarter adjusted EPS coming in at 27 to 28 cents. The estimate was for 23, so a solid beat there. Second quarter revenue coming in, beating expectations as well. 512.7 million, 516.8 million. Estimates were for $509.2 million.
All right, Lululemon bouncing around too, still up about 2/3 of 1%. So it's pairing some of its gains that we saw initially. I think it was up as much as 4% in the after hours. Here's the big one, the red sticky, as we like to call it, at Bloomberg. Lulu seeing fiscal year net revenue $7.61 billion to $7.71 billion. That is above their earlier estimate of $7.49 billion to $7.62 billion. First quarter gross margin 53.9%, a little bit light. The estimate was for 54.9%. And first quarter total comp sales ex FX is up 29% versus an estimate of 22.2%. So some really outperformance. And again, that outlook is what we are really keying in on. And again, that stock in the after hours, now up again 2%.
All right, well, speaking of outlook, Restoration Hardware sale, RH, I should call it, are down by about 3.4%. The company said that it sees year net revenue growth flat to up to 2%. The company also saying it sees second quarter adjusted operating margin 23 to 23.5%, but it did authorize an additional $2 billion for a share buyback. The company sees second quarter net revenue down 1 to 3%.
Yeah, those buybacks continue to come. I do want to mention that stock, by the way, is highly shorted. About 70% afloat of RH is being shorted. And Okta, that stock is up about 12% in the after hours. Yeah, it's a big bump to the upside.
It's been getting hit hard.
It has been. Second quarter adjusted loss, 31 cents a share to 32, an estimated loss of 32 cents. So it seems like it's in line. But anyway, that stock is rallying in the after hours.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Let's get you caught up on market action today. Some news after the bell. Lululemon posting net revenue guidance for the full year that was above forecast. Shares right now in late U.S. trading up by more than 2%. We also had news on Citigroup today. The company may record losses of at least $50 million. That's after a fat finger trade at its London office last month. You might remember this created a flash crash in European equities. Now, we are told Citi is still in the process of tallying losses from the mistake. The final figure could be even higher. At one point, Citi shares were down 1.5% today, but they finished up by about, let's call it 0.1%. Interesting day and a major reversal for U.S. equities. The day began with a warning from Microsoft on the negative impact of a stronger dollar. At the low, Microsoft shares were down 4%, but the stock traded higher by 0.8% today, and that may have been behind a lot of the reversal that we had in the equity market. The S&P finishing near the best level of the day with a gain of 1.8%. The Dow's up 1.3% on the session. NASDAQ comp today better by about 2.7%. Very little movement in the bond market ahead of that employment report tomorrow. A 10-year Treasury last quoted in New York at a yield of 2.90%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. Well, it is a $38 billion market cap company, customers around the globe, more than 2,000 locations around the world, helping to create so-called intelligent buildings to help address our worsening climate crisis. We're talking about Johnson Controls International, which is also a company that's got a great vantage point when it comes to the global economy and corporate expenditures.
Well, that's exactly where I want to start with George Oliver, Chairman and Chief Executive Officer of Johnson Controls. George joining us via Zoom from Milwaukee. George, how are you?
I'm doing very well. Great to be with you today.
Well, as Carol mentioned, you do have such a great view on what's going on here in the United States and around the world. What is your view of the economy here in the U.S.?
Yeah, when we look at what's happening within our business, we see unprecedented demand for what we do within buildings. Let me start by talking about what we do. We're a smart solutions provider for buildings and infrastructure. And, we did a merger 5 years ago, which put together two leadership companies in the space, Tyco and Johnson Controls. And with our strategy of taking the multiple, building systems and then being able to deploy technology with a data platform that enables us to be able to significantly change the outcome of buildings. And those outcomes are reducing energy demand, improving the indoor air quality, and ultimately, making autonomous buildings. And so for us, given the environment that we're in, we're seeing very strong demand. We've got backlogs that are record high backlogs. Our challenges have been shorter term is ultimately converting with the supply chain challenges on that demand. And when you look at what we do within buildings, when you look at the global carbon footprint, it represents about 40% of the overall global carbon footprint buildings do. And then the opportunity that we have now as a smart building solutions provider to significantly reduce the energy that's consumed in the building at the same time that we're upgrading the indoor air quality and ultimately creating an autonomous building. So for us, we're watching the economy closely, but given what we see now going forward, where now buildings have become much more strategic. I think in the past, buildings were built with multiple systems separate and apart. And now with the opportunity to bring that all together into one solution set, we're seeing very strong demand. So when we look at the market that ultimately is being created with these new problems that our customers are trying to solve, we see roughly a cumulative about $250 billion of additional market over the next decade. So we're watching it closely, but right now we're really focused on being able to execute on the backlog to support our customers.
It's interesting when you talk about unprecedented demand, strong demand. George, how much of it is because of companies looking to cut costs and be more efficient? How much of it is it because of regulatory changes or the push towards, concerns about climate change and being much more sustainable? How much of the demand is new build?
Well, when you look at, let me start with the commitments that have been made on climate change or decarbonization that have been made broadly across businesses as well as with governments. And I think coming back from Davos from last week is how do we take all of the commitments that have been made and ultimately how do we now bring that together with a combination that's shared between business and government, and ultimately now capitalize on what we see the opportunity to be. So for us, with those commitments and recognizing now to get to net zero, buildings are going to be an important part that have to be addressed to get to the commitments that have been made. So we're seeing that, for instance, in our sustainable solutions business, we see a pipeline now of let's say about $7 billion, and we'll convert roughly $1 billion of that during the course of the year. So we are seeing a significant demand for the type of solutions that we can now provide. Mm-hmm. And we are uniquely positioned as Johnson Controls that not only do we have the building systems, but now with our Open Blue platform, which is a platform that allows us to be able to bridge all of the building systems together, get a full set of the data, and then ultimately create outputs that historically haven't been delivered.
All right, so help me out here. So how much, though, is, in terms of that demand, if you had to put it into cuts of a pie or percentage-wise, how much of that demand is new build? How much of it is a cause of regulatory change? How can you break it down a little bit? I'm curious about what's the psyche of people who are doing the spend.
So, Carol, what I would say it's both. I mean, when the pandemic hit, we immediately saw our demand to be able to upgrade the indoor air quality, which requires upgrading systems and deploying digital to be able to then optimize how you deliver a clean air delivery rate within buildings. So we saw that, which is really taking the built environment and being able to elevate that built environment to solve for today's problem. So a lot of retrofit, a lot of upgrade, a lot of repair, leveraging our technologies. Now, at the same time, you've seen the new construction come back. When you look at architectural billings index and a lot of the other metrics, you've seen where there's been an expansion, and a lot of that growth is coming back. So for us, it's been both. It's not only a significant demand for upgrading the existing built environment, but at the same time, fundamentally changing how buildings are built that ultimately are going to be able to deliver a significant different outcome as it relates to energy consumed as well as the environment that's created.
George, sit tight for a second. We're going to come back because I want to continue with you and talk a little bit more about macro and what you guys are working on. And I want to dig a little bit deeper into the supply chain. So we're going to come back with George Oliver. He is the chairman, chief executive officer of Johnson Controls International. He's joining us via Zoom in Milwaukee. Meantime, a headline crossing the Bloomberg. President Biden, as we thought, we heard about this a little bit earlier, to visit Saudi Arabia this month and meet with the Crown Prince. We're talking about MBS specifically.
And you recall really, that was President Trump's first visit outside the U.S.
Well, and what's interesting is President Biden hasn't chosen to recognize MBS, but that's changing.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, this is Bloomberg Business Week. Carol Massar along with Tim Stanovec. One of the things I love when we catch up with the CEO, and we are right now talking with George Oliver, Chairman and CEO of Johnson Controls International, is you just get a big picture and kind of get to tie in so many of the big stories that are out there and really what CEOs are facing.
Yeah, he's talked a little bit about what he sees around the world with the economy and demand. When we come back, we're going to talk about supply chain and challenges there. First, though, Doug Krisner, give us an update on the trade.
All right, it was a positive trade for the equity market, Tim, but I want to begin with the oil story because you guys were talking a moment ago about what the New York Times is now reporting. President Biden will visit Saudi Arabia this month to meet with the Crown Prince. The subhead on this story is this: as a candidate, President Biden vowed to punish the kingdom for the brutal assassination of Jamal Khashoggi, but now he wants to rebuild relations as he seeks to lower gas prices and isolate Russia. It's interesting because earlier today, OPEC Plus agreed to increase the size of oil supply hikes in July and August by about 50%. Now, that in and of itself would argue for lower prices, but that wasn't the case today. The market instead focused on a drop in U.S. crude inventories and a decline in gasoline stockpiles, particularly here in the New York area where we are now at the lowest level since 2017. WTI crude futures settled up 1.4% today to just under 117. Okay, now the equity story. We finished well off the worst level of the day. The session began with a warning from Microsoft on the negative impact of a stronger dollar. Microsoft shares had been down by 4%, but at the end of the day, Microsoft picks up about 0.8%. The Dow today higher by 1.3%. S&P gains 1.8%. NASDAQ comp climbs 2.7%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, great update. Thank you so much, Doug Krisner. Let's get back to our guest. We're talking with George Oliver. He's Chairman and Chief Executive Officer of Johnson Controls International. We've been talking about intelligent buildings. One thing I want to know, George, it's interesting. Our David Weston catching up with Larry Fink over at BlackRock and talking about we're going to be living with more uncertainty, saying the inflation problem isn't, it's policy related, but that the Fed isn't someone who can fix some of these issues, specifically talked about the supply chain and the supply chain problems. How is your supply chain? Are you seeing any kind of loosening in some of the snarls that have been out there?
Yeah, if you look at what's happened over the last couple of years with the pandemic and then the multiple shutdowns that have occurred to contain the virus and now some of what we're experiencing in China with the shutdowns there. And then at the same time with the Ukraine crisis and then in our space, the unprecedented demand. So when you put all of that together, we've had our own challenges and it's really about resiliency. And so not only with what we do to help our customers with their buildings and infrastructure and creating much more resilient buildings and communities, but also making sure that we're working with our suppliers to create a much more resilient supply chain globally. And that's what we've been doing the last 2 years, and we've made a tremendous amount of progress. Now, what we're seeing is with that strategy, we are seeing improvement, and it's across all of our commodities, whether it be microchips and semiconductors or other materials. And so we've been working through it.
But what does resiliency in supply chains mean, George? What does that mean? Does it mean you're shifting where you're doing it, or what does that mean?
We've always had a strategy in our supply chain to be local for local. Mm-hmm. And so when you look at our manufacturing footprint, we have manufacturing footprint in all of the key markets we support. And then we build local supply chains to support those manufacturing plants with local supply. And so when you're building a global supply chain, there are some products that are used across multiple markets. And so you can't predict, whether it be the environment and natural disasters or pandemics or, these or some of the geopolitical challenges that might exist. And so our strategy has been to be local for local. And we've been developing not only the right product, but also having the local supply chain that creates resiliency and how we're able to then, be able to support our customers and deliver for our customers. So that with the idea that you have multiple sources globally. Mm-hmm. So as you're going through some of this disruption, you've got a supply chain that has multiple sources. So you can source from multiple locations. all of that comes together into having a supply chain that's much more resilient.
Well, George, I'm really intrigued when you said you're seeing improvement in the supply chain. Where specifically are you seeing that? And you're seeing improvement when it comes to commodities as well.
Is it chips? Is it like, what is it?
It's been when we look at the work that we've done to strategize our semiconductors and chips, we're making good progress there across the globe. A lot of our supply chain challenge was in North America. When we look at our supply chain, we have multi-tiered suppliers. And a lot of the challenges that we had with the disruptions from COVID, the shutdowns, and then some of the labor challenges, not necessarily within our facilities, but within our suppliers. And so we've worked very closely with them in being able to address their labor challenges, ultimately getting the supply chain back operating. So it's really looking at all levels of the supply chain, as well as when you look at the global footprint, all regions. And we've been making progress pretty much across the board.
Georgia, are you expecting a recession maybe later this year or maybe next year? Are you when you gather your management team, do you say, guys, this is what we need to have the playbook ready for?
Well, you can go back with the pandemic, and I think we demonstrated this very well. We've been creating a lot of agility with how we operate as a company, and we've had an incredible opportunity with the work that we do within buildings and infrastructure to respond to these crises. Like, for instance, a good example is in the early days of the pandemic, we support critical infrastructure, which is healthcare.
Right.
And we were on the front lines building hospitals in a matter of days that had the highest air quality and ultimately the resource that they needed to be able to attend to those infected. And so we've built, we've been very agile with what we do, not only responding to the new demands and the crisis, but also agility relative to understanding a little bit of what's going to potentially happen and make sure that we're always positioned to be able to deliver for our customers, be able to solve their biggest problems, and then ultimately make sure that we're taking into account what we see happening on the horizon.
So being agile in case of whatever comes your way. So could be a recession, could not. Is that fair to say?
Yeah, like I said, our focus right now is delivering on the backlog and delivering for our customers, given what we've seen here over the last about 18, 24 months. Obviously, I think the demand that we see now, solving the biggest problems within buildings, which is indoor air quality, making them much healthier and safer, and then also being able to address 40% of the global carbon footprint, that demand is going to continue because the commitments have been made. And ultimately, our customers have to deliver on those commitments.
Right.
So we're working closely to make sure we understand how that plays out and how we're positioned to support our customers at the same time that we're taking into account, making sure that we're going to be agile with any downturn that might occur in some of the key markets that we operate in. But what I would say, it's really all about making sure that we're not only supporting the customer with the demand that we have today in the backlog, but at the same time taking into account the factors that we see that potentially could impact us longer term.
George, thank you so much for your time today. Really appreciate it. George Oliver, he is Chairman and Chief Executive Officer at Johnson Controls, joining us via Zoom from Milwaukee.
Well, from Milwaukee to New York City we go for a check of the latest world and national news with Denise Pellegrini. Hey, Denise.
Hey there, thank you. And from New York City to Saudi Arabia we go because President Biden apparently planning a trip to Saudi Arabia this month to meet with the country's crown prince, according to the New York Times. And the White House, meantime, praising OPEC Plus for speeding up increases in oil production. Buckingham Palace says Queen Elizabeth will miss the Platinum Jubilee church service. That's after feeling discomfort during earlier events related to this whole celebration. The Queen is 96. Senator Murphy telling us he's confident New Jersey will pass stronger gun control laws.
No, I'm an optimist on our package. I believe, at least in part, and I hope in full, it will pass. But some Republican lawmakers have put forth some horrible bills to allow things like carrying weapons in church, to re-allow hollow point bullets. Yeah. And I want all these bills to get a vote because I want all 9.3 million residents in New Jersey to know exactly where every single one of us stands on these.
And Murphy speaking there with our Joe Matthew on Balanced Power. White House Press Secretary Karine Jean-Pierre talking about President Biden's plans to comment about gun control tonight.
He's going to renew his call for action to stop the epidemic of gun violence that we've seen in Uvalde and in Tulsa and in Buffalo in just a few short weeks.
And we'll be carrying the president's comments live here with insight from our Ed Baxter on Bloomberg Daybreak Asia. Another report that Russian leader Vladimir Putin is being treated for cancer. Newsweek says it's terminal, attributing the information to high-ranking intelligence officials. Global News 24 hours a day. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic.
You going to any weddings this summer? What's so funny?
No, I was going to say to you, I was talking to actually Matt Miller and Paul Sweeney. I popped in on the show.
Oh, you did?
I didn't actually
Did you just
go.
come in? You came in while they were on air?
I waited until there was a commercial break. I knew that they were in. And
This is how it works around here, by the way. It's like you walk by the studio, and it's these great windows. You can see us on YouTube. So you see who's in the studio, and because Carol knows everybody, she just pops in even if they're on air.
Well, you can also see like what someone's searching in because it's like a fishbowl, and I'm like looking over.
What's Matt searching for? Was he searching for chainsaws?
I've been sworn,
chainsaws?
No,
because that's what he was searching for when I came in. Chainsaws. He just moved to the suburbs. He needs to buy a chainsaw.
Anyway, I saw some pictures. I'm like, Matt, what are you looking at? Anyway, so we started talking and then Paul Sweeney, I forget why. Oh, I know. They were talking about Winning Time.
Oh, yeah.
And I said...
Great. I like the show.
I said, we had the creator of it on.
Yeah.
Right? Winning Time? No, what was the other show?
No, it was Winning Time.
McKay?
Well, it was the McKay's show, but we had,
Yeah, Adam McKay, right?
Well, no, he wasn't the one who came on with us. Yeah, it was Jim Hecht.
Not Jim Hecht. I'm thinking of somebody, but we had Adam McKay on and something.
I didn't interview Adam McKay.
Did I?
I don't know.
Oh my God!
Ari, help us out here. What's going on?
Anyway,
Ari's in the control room.
Paul Sweeney goes, you guys we have the best guests. And we do have the best guests. And we hit on the best stories, which finally gets us to the story we wanted to talk about.
1 minute and 25 seconds later.
Tick, 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 pressure's on. It's like the bonus round or the fast round or whatever you call it. Inflation hitting the wedding season, costing guests as much as $20,000. Guests?
Yes, that's what I'm saying. This is crazy. Okay, there are an estimated 2.5 million weddings happening in the U.S. this year. It's the most since 1984, after many couples either postponed marriage due to COVID. Meanwhile, 73% of invited guests polled in a recent Credit Karma survey said inflation is negatively affecting their ability to attend, forcing some to take on debt, use savings, or skip the event completely. Don't go into debt for a wedding.
Bachelorette parties, travel. Oh my gosh, 20. It does, especially because of the destination weddings. It's not cheap, and it's unfortunate. Anyway, we got there in a roundabout way. I'm just saying. We do the best stuff. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We heard from Lululemon after the closing bell. The company boosted its net revenue guidance for the full year. Shares right now higher in the late session by about 1.9%. Definitely a recovery for the equity market today. We began on the back foot after Microsoft warned of the negative impact of a stronger dollar. Microsoft at the low point of the day had been down 4%, but shares finished up 0.8% on the day. We were also keeping a very close eye on trading in Citigroup. The stock had been down by as much as 1.5% today. We are told the company may record losses of at least $50 million after a fat finger traded its London office last month. You might recall that incident triggered a flash crash in European equities. Now, Citi is apparently still tallying the losses from that mistake. The final figure could be above that $50 million figure. Shares in Citi finished the day up by 0.1%. Dow Industrial Average today with a gain of 1.3%. In the broader market, we had the S&P 500 rising 1.8%. Leadership coming from consumer discretionary along with material stocks, and we had the NASDAQ Composite up about 2.8% today. A lot of dollar weakness as we get set for trading in Asia, with the Bloomberg dollar spot down 0.7%. A much stronger yen here at 129.85. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Carol Massar, Tim Stenovic here in our Interactive Brokers studio. Well, 50 years after leaving Elmira, New York, the preppy designer Tommy Hilfiger is back with a program for aspiring business fashionistas. You can find this story online at Bloomberg.com, Business Week, and on the Bloomberg. And Bloomberg News higher education finance reporter Janet Lauren caught up with the designer to hear more in this piece done for Bloomberg Business Week Digital. Check it out.
This is where it all began. This is where I really learned my work ethic. I like coming back.
What was once a thriving manufacturing town, a place known for where Mark Twain wrote parts of his novels, remains home to Elmira College. It's also where fashion icon Tommy Hilfiger and his 8 siblings grew up. The town, which sits in the western half of New York State, today is working to redefine itself. A business program he started is helping draw students to the college.
I wanted to give back to the community. Elmira College is such a great institution and has so many sentimental memories. It would be incredible to do something with them.
While Hilfiger didn't attend the school, his early employees were Elmira College students at his first store in downtown Elmira.
In this building, we had, in 1969, the basement boutique. At first, we called it the underground. And then in 1969, we started calling it People's Place.
We decided that because we were having such success, we should open stores in other college towns. It was one of the best eras of my life, having my business and being a part of the downtown Elmira community.
Today, the school lies in the crossfire of demographics gone the wrong way. Even before the pandemic, the decreasing population of high school graduates has been a problem for colleges in the Northeast and in the Midwest. The liberal arts college this fall counted 650 undergrads, down from almost 1,600 2 decades ago.
I think people really want to know what the next step is in life. I think they want to know where they're going and how they're doing it. A lot of it comes from what students and young people are passionate about.
50 years after he opened his store, he and his family approached the college to create a business program for fashion merchandising and marketing. He donated $100,000.
If I had known more about the business of the fashion business, I would have been much more successful back then, and I probably would have avoided the bankruptcy. But as a result of the bankruptcy, it opened my eyes to the fact that in order to be a successful brand, you really have to understand all the workings of the business. And the marketing today is changing. I don't know that many schools are teaching what might be next versus what has happened in the past.
That story online at businessweek.com and on a Bloomberg Quick Take. Janet Lauren, higher education finance reporter for Bloomberg News, joins us now from Texas. Janet, good to have you with us. I want to talk a little bit about your conversation that you had with Tommy Hilfiger. You know, you mentioned the declining enrollment in the area and at colleges in the Northeast. What is his goal with establishing this gift at the school?
Well, I think as you heard him talk about in the video, in his early business career, he didn't know about the business side. He talked about the importance of making payroll and understanding how insurance works. And he wanted people who are interested in going into this business to have a very firm foundation rather than just the design, in the hopes of avoiding mistakes that he made. And this is his hometown. He had a connection with this college initially because he hired students to be employees when he first started out.
You know, Janet, we've had so many conversations with you about how many schools there are out there, and there's a lot of smaller schools that are certainly struggling. And I just wonder, is there something that Tommy can do to kind of put this one, help put it on the map by helping kind of fine-tune some of the program and education that's there, specifically whether it's the fashion industry, kind of give it a reputation for certain, for a certain type of discipline?
Yes, absolutely. And one of the things he was talking about is that fashion, merchandising, and marketing, for example, is very different these days. Mm-hmm. And we talked to the professor who worked on the curriculum, and there are skills that students, need to learn today that just weren't even existent 10, 15 years ago. And he's hoping that a program like this will, prepare students for jobs, as well as what Elmira College has done other things. They've created other programs and partnerships to look at programs like sustainability, where students are really interested in these types of ideas, and they're all geared to helping them find jobs, which is their end goal.
Finding jobs being the end goal, Janet. And I wonder, based on Tommy's experience of traveling 4 hours to New York City, buying jeans and then reselling them up in Elmira, I'm wondering how they plan to get the practical experience in New York City that Tommy Hilfiger was ultimately able to get.
Well, he worked with the program to help them make connections. So when they're visiting in New York, they're able to see what these fashion houses are like. And the school is requiring internships for, in order to complete these types of programs. So they're finding the practical experience. And, as you heard in the video, there's only 650 students at Elmira College. So as these types of programs grow, really every enrollment counts. And it really, they really need enrollment. And programs like these are certainly helping because it's just really about the demographics. There are just fewer 18-year-olds, period. And it's not just in upstate New York. It's all over the Northeast and in the Northwest when you have these very old historic colleges, small colleges that are, hoping to stay around for the long term.
Yeah, exactly. Really interesting and fun to see this conversation, see what he's up to. Janet, thank you. Janet Lauren, she's higher education finance reporter at Bloomberg News on the phone from Texas. All I can think about is, I was going to this tweet that I put out yesterday. Carrie Healy, president of Milken Institute, former head of Babson College, 16% of high school grads make more money than the lower 50%. 50% of college grads.
Yeah, it's remarkable. And, her views on higher education certainly evolved is a good way. And she said a lot of it happened over the last year.
Yeah, exactly. No, I do think, we talk so much about recalibration, supply chains, alliances, how we work so much. And I do think there is going to be some great reckoning when it comes to college education. I love mine, learned so much, but it's getting pretty pricey. Are you
a major donor every year? I'm not anymore.
I'm not.
Or a minor one either.
I've got a kid I'm putting through college. That's pretty expensive. All right, you are listening. Have a good and safe evening, everyone. This is Bloomberg.
Innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in New York, and this is Bloomberg Technology. Coming up in the next hour, he helped introduce Sheryl Sandberg to Mark Zuckerberg, and the rest, they say, is history. I'll be joined by Roger McNamee to talk about that meeting, Sandberg's legacy, and where the company goes from here. Plus, he sat on Facebook's board for 7 years. He's known Sandberg for more than 20. My exclusive conversation with Don Graham on Sandberg's role in building the company and where Meta goes from here. And inflation keeps raging. No relief in sight, according to President Biden. This as the market and tech and crypto stocks in particular keep whipsawing. We will be joined by Sebastian Mallaby, author of a new book, The Power Law, about whether Silicon Valley can hold on to its role as a center of power later in the hour. All of that in a moment, but first I want to get a look at the markets and Microsoft giving the market a scare by revising its outlook in a changing world. Bloomberg's Ed Ludlow has all the details. Microsoft, the market story of the day.
Yeah, we really started Thursday with some nerves. The stock down as much as 4% at one point. They're saying that the stronger dollar and rising interest rate story, of course, has been a real headwind. So they revised their outlook for both revenue and earnings, a $460 million hit on that strong dollar, unfavorable currency conditions in the quarter. But you look at how the stock traded throughout the day, and by the end of the day, we kind of shrugged it off. Even some saying it was bullish that they were able to revise their guidance so modestly in the face of that currency headwind, closing it up 0.8%. Also news breaking after the bell on Microsoft that they've adopted principles of organization. Of course, they're acquiring Activision